Hello there, folks. Frank Zorrilla, Zor Capital. The 1st of December. The market is almost closing. It's 3:55. I wanted to go over a little recap of this week because the market has become a headline market. Over the last couple of days, we had some huge swings. The Dow was up 300 yesterday, up 300 yesterday, down 300 today. Look at this candle from the IWM. This is a huge, huge candle. Based on whatever's going on in Washington with Flynn and a tax bill. So this headline market, poses a risk to your swing position. So I'm going to go over some of the things you can do to perhaps sidestep some of this volatility that just started just yesterday. So I'm going to go. This is my rolling watch list, my rolling 5-6 day watch list, which I believe is it's more important to me than having the actual indices on my main screen, which I don't have, because my rolling 5-day watch list will tell me a lot more than the S&P 500 that Qs the Dow will tell me. My watch list is going to tell me how things are working. Are stocks following through? Should I sell them early? Should I cut my losses quicker than usual? So let's go through the list to see if we can learn some things. This is the watch list from 11/22. Here's the first lesson. Here's a stock we got involved. 1, 2, 3, 4, 5. Right over here, going through this high. We got involved at 316. The stock went up, and then it breaks. I wouldn't say break down. It's the stock sold off. We were stopped out, and then this happened. Okay, this is going to happen often. All right, you cannot circumvent, you cannot sidestep these type of things. My suggestion, very simply, is that you make sure that you're able to adapt and buy back the stock if it sets up again. All right, and I think that's big. Where if you get stopped out and a couple of days later it sets up again, then buy back. And I would suggest that you view every single setup individually, regardless of what happened with you in that stock a day ago, a week ago, or a month ago. Let's see what else we got. ECYT still looking okay. Cure, this is what I'm talking about. The intraday volatility, which is not a big deal in this case, okay? This was on the list right over here, on the list right over here. Had a nice move this morning on some type of upgrade, but it sold off. It could be just a stock or it could be just the intraday volatility. Let's see if we can find some other things here. This is just all my watch. This is the reason why you take stops. This was on the list right over here, broke down. You got to take these stops. And, you live to fight another day, and don't be afraid of buying back if they set up again. Some of these Bitcoin plays, they came back to earth. Here's another situation. Here's what happens. First Solar was, we bought the stock at 61.06 going through here. Immediately that same day, right after the buy, the stock goes up 2 points, which is great. And then it sells off. You take the stop, and next day it goes up. And then now it goes down today again. So this is what happens when you have a very volatile market, which is a headline-driven market, where these headlines are coming out intraday and are moving stocks in a very big way. And what you can do very simply is, number one, you can reduce your size, okay? That would be my number one suggestion. Number two, take half and half. Intraday stops, closing stops. Okay, you take half your size. You take that intraday stop, and then the other half you can take on the closing basis. And then number three, don't be afraid to buy back the stock if it sets up again. Here's another one, SPPI, which was on the list today. Finally triggered today for the first time in the last 3 or 4 days. And then it triggers, it goes down, and here's where that intraday half and half works. Intraday, you would have been stopped out if your stop was right over here, 1870, 1860, you would have been stopped out. But here in the closing basis, the stock is making the move back higher, so you would have sold half if you were working with the half and half style, and now you still have half, okay? And maybe this last piece will maybe make up some of these losses, and perhaps the stock will move higher, or even next week on Monday specifically, the stock goes through this high, then you can buy back the other half. But I'm a firm believer that, you know, you think defense first, and then you can always double up on the offense when things look okay or when things are better. Here's another one, Netflix. Stock right over here. We get involved in 196.02 through this high. The stock goes up almost 4 points immediately. That's exactly what you want from a swing trade. You want to buy something, you want it to go up immediately. That just tells you you're buying the right setups at the right time. The next day, huge sell-off. I mean, it goes down. This is the reason why you take your stops, because you want to live to fight another day. Sometimes, or over the last couple of years or so, if you decided not to take your stop, you know, bull markets, they bail you out. When things get tough, they're not going to bail you out. And here, so far, those who did not take the stop are not being bailed out as of yet. Let's see if we can find some other... here's another question that I got. We got involved with this stock here, Greg. Going through this high, the stock was up 42% from this close, up about 25% from the buy stop. And the question was, should you wait, you know, and ride the stock for the next 3 or 4 or 5 days? When you get a 20% move in the matter of a couple of hours, I suggest you take it. Okay, you take a big piece off. If you want to hold on to a piece and ride it, that's perfect. That's perfectly fine. But when you get this type of move and the stock goes from 310 up to 4.25 in a matter of a few hours, take a big chunk and hold on to the rest if you wish. RDUS, here's another stock, okay? We got involved with the stock right over here going through this high, made a nice move immediately. It goes below the breakout low of the day. It's trying to work on a possible character change with a 10 and 20-day moving average. Here, I got stopped out, but I have no issues whatsoever getting involved with this stock on Monday going through 28.60. Okay, and chances are, if it does happen, I'll get involved probably with smaller size, only because we have so much headline risk going on right now. Look at this CYRX, same exact thing. Look at this big candle here. And this is why I think now, until things change a little bit, until we calm down, it's only been 2 days, but until we calm down, maybe you want to reduce your size and use the half and half strategy, half intraday, half on a closing basis. Let's see if we find anything else. MRTX looks okay. ZGNX looks okay. Here's another stock that we got involved right over here, right over here. We took a piece off 7.5%. We got stopped out, and we got back involved in the game and made a nice move. We took some off here on the JMP upgrade, and then we got involved here again. This stock still looks very good. Okay, and as far as stops are concerned, okay, most of my setups, it's not hard to see where you're wrong. Generally speaking, you can use a 3-day low. If the stock actually breaks down and has a big move, then you can use that breakout day low as your stop. But typically, I'm getting involved in stocks that are forming very tight patterns, and if they break that pattern, it's not hard to tell that you're wrong. So that's a question in regards to stop. And again, you have to find out what works for you. I can only give you some type of guideline, but at the end of the day, you're trading what you believe. You're trading yourself. You are pretty much your biggest challenge, not the market. And what might work for me might not work for you. So you have to find what works for you. Here's a stock that we got involved, ABEO, going through this high right over here. We got involved at 1701. Stop is right over here, 1580. If this stock breaks this level here, it looks completely different. So it's not hard to see with these setups where your stop is, as opposed to buying something that's up like this. Then you have to give it so much room. Because a stock that when you're chasing stocks like this, stock goes up whatever it is from $14 to $17 a share, and you're buying right up here. This stock can go all the way down up to here without actually not doing anything wrong, and that's the reason why I don't like chasing stocks. But when you're getting involved with very tight situations, it's not hard to tell when you're wrong. So either way, just for a quick recap, my suggestion, we have a headline market now, which is creating some volatility in the market, which might affect your stops intraday. You might want to reduce your size. You might want to use a half and half strategy, intraday stop, and also a closing stop. All right. So trade them well and be well. If you have any questions, you can always email me or hit me on Twitter @ZorTrades.